Hey wealthy people, in this video you will get a detailed analysis of ICICI Prudential Multi Asset Mutual Fund, and after watching this video you will be able to make a better investment decision. This is the past performance of the ICICI Multi Asset Mutual Fund along with the benchmark index and the average of all the multi-asset category mutual funds. The blue line is for the ICICI Multi Asset Mutual Fund, and you can see that in the past 1 year this mutual fund has outperformed the benchmark index and the average of the multi-asset category. The 3 years annualized returns look even more amazing. Right from the beginning, this mutual fund has been giving exceptional return compared to the benchmark and the multi-asset category average. At the end of the 3-year period, you will see that ICICI Prudential Multi Asset Mutual Fund has given 61% more returns compared to the multi-asset category average. In the past 5 years as well, ICICI Multi Asset Mutual Fund has given good returns. Initially, it was giving a mix of a performance, but after September 2021, it started outperforming the benchmark and the multi-asset category average. The same is the story for the 10-year as well. Right from the beginning, it has given good returns, and at the end of the 10-year period, you will see that it has given almost 60% more returns compared to the category average. This is what the annualized returns look like in numbers term, and for all the periods that are highlighted here, you will find that the ICICI mutual fund has outperformed the benchmark and category average. The good thing about this mutual fund is that it has been giving good returns to its investor from a very long period of time. For instance, in the past 10 years, the average annualized returns of a multi-asset category mutual fund is 11.84%, whereas ICICI mutual fund has given 17.62% annualized returns. That means this mutual fund has given 48% more returns than the multi-asset category average. This is the asset allocation of ICICI Multi Asset Mutual Fund. In short, it tells you that how much of your money will be invested into which different asset class. For instance, if you invest 100 rupees into this mutual fund, then close to 58% will be invested into equity, which are the large cap and mid cap companies of the Indian Stock Exchange. Close to 14.5% will be invested into cash and cash equivalent, which is nothing but the short-term money market instruments. The third major investment will be in the commodities, where you will invest 14 rupees, and this investment is made in the gold ETF and the silver ETF, and close to 12 rupees will be invested into the debt, which is nothing but the government bonds and debenture, and a little over 1 rupee will be invested in the real estate segment. By investing into different asset classes, you will get a better diversification, which will help you to mitigate your risk during the time of volatility. When you look at the sector-wise breakdown of the 58% investment that is made in the equity, you will find that this mutual fund is heavily betting on the financial and energy sector, and close to 50% investment is made in this sector combined. These are the top 10 stocks this mutual fund has invested into, and most of the companies belong to the large cap category. And we all know that large cap companies are more safer compared to small cap and mid cap companies. So this should provide some stability to the mutual fund during the time of volatility. Overall, more than 45% investment is made in the large cap companies, followed by the mid cap companies, in which it is investing close to 10.5%, and in small cap companies, the investment is around 2.5%. This table tells you how much returns your one-time investment would have fetched if you would have invested 10,000 rupees in this mutual fund over different time period. So 10,000 invested 1 year back would have grown to 12,849 rupees, which equals to 28.5% returns in only 1 year. This is more than 4 times of what you get in the fixed deposit. In the past 3 years, your 10,000 would have grown to 18,949 rupees, that equals to 89.5% absolute returns, which equals to an annualized returns of more than 23.7%. This is the SIP return calculation of ICICI Multi Asset Mutual Fund. If you would have started a 10,000 rupees SIP in this mutual fund, then your total investment would be 1,20,000 rupees, which would have grown to more than 1,37,000 rupees. In the past 3 years, your 3,60,000 rupees investment would have grown to 4,98,000 rupees, an absolute return of more than 38%. And in the past 5 years, your 6 lakh investment would have grown to 10,69,000 rupees with an absolute return of more than 78%. Hey, by the way, if you're watching my video for the first time, then let me tell you that my entire channel is dedicated to help investors make better investment decisions, so you can consider subscribing to the channel. These are the 3 years rolling returns of ICICI Multi Asset Mutual Fund along with the multi-asset category average. The returns are from 2013. The green line is for the ICICI Multi Asset Mutual Fund, and you can see that right from the beginning, this mutual fund has had an impressive performance. At one time, ICICI Multi Asset Mutual Fund gave 2 times rolling returns of what the multi-asset category average was. Though there was a downfall during the time of COVID, but post-recovery has been really good, and once again ICICI Multi-Asset Mutual Fund has been giving good rolling returns compared to other multi-asset category average. If you don't know, then let me quickly tell you that rolling returns is a better metric to understand fund's performance. The average rolling returns of the ICICI Multi-Asset Mutual Fund in the past 11 years is 14.55%, which is a really good number, whereas the multi-asset category average is 8.9%. When you add these three numbers, you will find that for 62.73% of the time in the past 11 years, this mutual fund gave at least 12% returns to its investor, and this fund delivered more than 20% returns to its investor for close to 21% of the time in the past 11 years. Whereas the multi-asset category mutual funds gave more than 20% returns to its investor for less than 1% of the time during the past 11 years. This tells you the amazing performance of the ICICI Multi-Asset Mutual Fund. This is the returns comparison of ICICI Multi-Asset Mutual Fund with the Quant Multi-Asset Mutual Fund, which is the best performing mutual fund in the multi-asset category. In the past 1 year, ICICI Multi-Asset Mutual Fund has given 29% annualized returns, whereas Quant Multi-Asset Mutual Fund has given more than 41% annualized returns. In the past 3 years as well, Quant Multi-Asset Mutual Fund has given way better return than the ICICI Prudential Multi-Asset Mutual Fund, and in 5 years as well, it has given 28% annualized returns, whereas ICICI Multi-Asset has given only little over 21% annualized returns. Hey, by the way, I have made a detailed analysis video of Quant Multi-Asset Mutual Fund versus ICICI Prudential Multi-Asset Mutual Fund. You can check the link in the description box and in the comment section. You can watch that video after completing this video. When you look at the important ratios, you will find that the ICICI Multi-Asset Mutual Fund is more volatile and risky compared to the category average of the multi-asset category mutual fund. But at the same time, this mutual fund is generating better risk-adjusted returns compared to the category average. These are some of the good things about ICICI Multi-Asset Mutual Fund that you may like. Number 1, the minimum SIP investment. You can start investing in this mutual fund with a very low SIP of 100 rupees per month, with good thing. Number 2 is the age of the fund. This mutual fund has been operating since 2013. That means it has been in the market for more than 11 years. Number 3 is obviously the high returns it has been consistently delivering to its investor from a long period of time. Number 4, the expense ratio of this mutual fund is less than 1%, although it is not the lowest in the multi-asset category, but still 0.84% expense ratio for the returns it is delivering is acceptable. Now there are two things that I don't like about this mutual fund. Number 1 is the minimum amount for the lump sum investment, which is 5,000 rupees. This amount could have been lower. The second thing that I don't like about this mutual fund is the exit load of 1% for redeeming more than 30% of your total investment within 365 days. There are other mutual fund in the multi-asset category that charges you 1% exit load but only for 15 days. So after 15 days, you can exit your investment without paying any penalty. In the end, I would like to conclude that ICICI Multi-Asset Mutual Fund provides a diversified investor who are willing to take above average risk for returns that are better than the category average. If you find this video useful, then please hit the like button and subscribe to the channel for more such valuable videos.